Good afternoon. Welcome to Midcap Radar. I'm Sonia and with me is Mangalam. Quickly, let's get you a check on the market and then we have an important corporate lined up in just minutes from now. The market is under pressure. In fact, yesterday's pullback, all of those gains are largely lost. The Nifty is down almost 100 points. The rally failed to sustain and the market breadth has now weakened substantially, over 1,400 stocks on the declining side. But the auto industry delivered a mixed bag in February. Market leader Maruti saw a nearly 30% fall in exports. I caught up with Shashank Srivastav, the Senior Executive Officer, Marketing and Sales at Maruti, to get a sense of the retail performance, and he was quite cautious. Listen in.
The exports for us for February were also normal. And what dip you see as compared with last year's number, last year number was about 23,000 and 24,000, and 17,000 is the number this year. Now, this drop is largely because of the shipment delay. So in the last week of February, we had some shipments which got delayed, which will be dispatched in the first week of March. And if you compare with the overall yearly numbers, April to February, then exports are quite ahead of last year. Last year's was around 211,000 at this time, and this year it is 229,000. And with the March shipments, I think we should end the year upwards of 2.55 lakh against the 2.38 lakh that we did in the last year.
Okay, so you're going to end the year with a figure of 2.55 lakhs, which is higher than what you saw last year. So you said that in the month of February, it's largely because of the delay in shipments. On an average, on a monthly trajectory, you think you would get back to 24,000 units per month in terms of exports over the next few months?
Yes. So I just gave you the figure 2,55,000 probably at the end of the year. Right now it is at 229,000. So you can guess that the March shipment should be around the 26,000.
Okay, tell us a little bit about the domestic market as well. I mean, it's on a wholesale basis, it's less than a 5% growth that you saw. Now, there is an expectation that because of perhaps the El Nino and the impending weak monsoon, demand could be hit in the rural markets, especially for the entry-level segment, entry-level cars. Is that your forecast as well? And on an average, what kind of growth are you forecasting over the next couple of months?
Yes, so if you look at the passenger vehicles, Maruti Suzuki's domestic sales actually went up 10.4%. We had 147,500 wholesale in this month against 133,900 of last year. So that's about a 10.1% up over last year. In the industry, the total sales were 335,000 against 303,000 last year. I'm talking of wholesale, which is about a 10.6% growth. So overall, I think in terms of wholesale, the month has been very good. In fact, it has been the highest ever February in the industry, so far. So that's actually very positive as far as wholesale is concerned. But on the retail side, though the retails have been lower, retails for February have been around 301,000 against 275,000 last year. So although there also you see a growth of about 9%, but when you compare with wholesale, the number of retail is much lower. And as a result, the stock in the network in the industry has built up. We started off with about 184,000 units. It's gone up to about 218,000 now in the industry, and that's about a 3 weeks inventory. So yes, I do see that there is a sort of a impact building up because of the retail loan rates going up in response to the repo rates, which we have seen tightening since May of last year.
Do you see incremental weakness though? You're saying there is 3 weeks of inventory in the industry right now, and retail sales, at least the growth has been lower than wholesale. Do you think it could get worse before it gets better?
Yes, so I think it's possible. It all depends on which way the economy moves. There are positives, of course. We have seen projection of a economic growth about 6.5% for next year in the budget, and also the infrastructure spendings, which should spur up demand quite a bit. But on the other hand, we have seen the loan rates going up, and we still see the inflation quite sticky, which should really, in economic fundamental terms, should impact the demand negatively. We also see in the rural sales, there are some questions being raised now because of the El Nino factor, whereby you would see an impact on the Kharif sowing, and that could also impact the rural demand. So overall, there are some positives and also negative, but on the balance, our view is that it's still quite positive.
So by the end of FY23, what kind of growth are you looking at overall? And moreover, in FY24, if the weakness in demand continues because of higher interest rates, because of inflation pinching pockets, do you think this could be a year, FY24, a year of perhaps single-digit growth for the industry?
Yes. So if first we talk about your question relating to the current financial year, in the current financial year, we have some very good estimates now of the total volumes that the industry should do. The industry currently at around 3.5 million, and I guess it should end up around 3.87 million in the end of March. That will still be about a 25% growth over last year. This is for this current year. However, going forward, even without the inflation rate and taking into account the monsoon El Nino factor, we had projected that the next year, FY24, the total demand in passenger vehicles would be roughly 4.05 to 4.1 million. That's a 5 to 7% growth. So in any case, we have projected a single-digit growth for the next financial year.
All right, so that is some commentary coming in from the management of Maruti. No respite for the market right now. The sell-off is only accelerating, down 125 points for the Nifty. It's the Nifty Bank which is actually doing badly right now, down 250 points, and the Midcap index too, while outperforming, down about 1/3%. At the low point, so what we'll do is take a short break, come back, get you more on the markets and individual stocks. Rahul Sharma of Equity 99 Advisors will also join in with some technical strategies. Weakness continues for the market as we've been pointing out. We're at the low point of trade for the Nifty right now, down 127 points. The Sensex is down 500 points, and this sudden sharp sell-off is on account of a couple of factors. One, the heavyweights aren't doing too well for the index. We have Reliance, which has moved to the low point of trade. It's been a weak week for that stock, down about 2.5% for the week. Axis Bank is the other one which has moved to the low point, and IT stocks aren't helping either. Wipro, for instance, has now moved lower. The IT index itself has entirely moved lower. The other factor is that the broader markets also are now taking a turn for the worse. If you just take a look at the advanced decline chart, all through the day we had the advancing line ahead of the red line, which is the declining line. But just in the last few minutes, we've seen those lines crisscross, and we have more stocks which are declining. 1,500 stocks on the red side as against 1,300 stocks on the green side. As you see, there has been an intersection and the red line has moved higher. It is also weekly options expiry, so just keep an eye out on a couple of options. The options that are extremely active right now, earlier it was the 17,400, 17,350 calls, but right now with this decline, 17,350 call comes into the picture. A lot of those writers believe that levels upwards of 17,360, closing in on the 200-day moving average of 17,392, will face stiff resistance for today. And at the lower levels, the only support that bulls are hoping for is the Monday low of 17,255. Why do I say that? Because the 17,300 put is seeing some writing. 84 lakh shares added in open interest for a premium of about 10 odd rupees, and we're seeing some writing at the 17,250 put as well. But it's a long way to expiry, so let's see where it goes. Things can move around, but so far, right now, the momentum firmly in favor of the bears.
Okay, firmly in favor of the bears. Seems like that. Well, let's get you some opinion as well. Rahul Sharma of Equity 99 Advisors joins in for a technical check on the market. Rahul, thanks for being with us. There was that one hope rally that we saw yesterday, but I guess it flattered to deceive. Tell us a little bit about what the expectation is over the next few days. Do you think the market will resume its downtrend, and what are the stocks to look at?
Yes, good afternoon, Sonia. See, I think very rightly said, what we saw yesterday was a really good session, and we thought that the momentum should continue further. But after those 9 red candles on daily charts, one green candle, which we saw yesterday, have been completely fizzling out at this current session. The market, Nifty particularly, is very near the support levels of 17,300, or on the downside further 17,250 on the immediate basis. And on the upside, I think very rightly said by Mangalam that 17,360 followed by 17,425 or 17,500 levels are really difficult to see right now for the market. Bank Nifty too is increasing the pressure right now. And I believe that the resistances will be really challenging for Bank Nifty, which are placed at 40,700 and 40,900 levels. On the downside, I still believe that 40,400 should stick up and show us as a support, followed by 40,200.
Okay, and what about individual stocks? Anything that catches your eye as a trade over the next couple of hours?
Yes, definitely. See, there is stock-specific action going on in the market, and one should stick up to the stock-specific and follow strict stop-loss level, because I think this type of market is not a good or funny for any funny play. So I think stock-specific. My selection first will be Voltas, which is trading at 915 level. See that this stock has come in focus from the market since the heat wave news have come up. On technical charts too, stock is giving breakout on daily charts, although the stock has already given good rally from 750 levels to 900. But I believe there is more potential remaining in coming days. So I think this stock may continue this momentum. Target price will be 950 to 960, keeping a stop loss of 900 in Voltas. Second selection is Vidhani, for which the target price has kept at 220 and stop loss level at 125. It looks really attractive on the charts.
All right. Rahul, wanted your thoughts on two stocks. One is Reliance, which is now down almost 19% from the highs. Are we likely to see any support in the near term? The other one is ICICI Bank as well. I mean, it was one of the stars of the last year or so, and now it's corrected about 11% from the highs, not too far away from its 52-week high. But again, we have seen a bit of a dip. Reliance and ICICI Bank.
Yes, definitely, Nigel. Banglam. See, this particular Reliance was taking support from the levels of 28,300. But then from last three sessions, what we have seen, this pressure is going more. And I think this 2,300 level should act like a strong support levels for Reliance specifically. If it takes this support, then I think you may see some bounce back coming in shortly. But if at all we crosses or close below 2,300 levels for Reliance, I think this will build up more pressure in market, which can lead this stock to 2,200 levels. And speaking about ICICI Bank, see, I was really bullish on ICICI Bank and Axis Bank, but today, Axis Bank is fizzling out a lot. Although this ICICI Bank has been maintaining its 200 demo on the daily charts, which is currently priced at 845 levels, which will act as support. And I think on the upside, this 872 or 870 levels will act as resistance, and on above it, I think this stock may go up to 900 levels.
All right, thanks a lot for joining in, and have a great day, Rahul. That's Equity 99 Advisors. Let's slip into a quick break. On our special segment on the other side, Midcap Spotlight, we'll focus on macro tech developers and all the updates on that front. Stay tuned.
We've been talking about how weak the market is, but despite that, we do have a bunch of stocks which are doing extremely well. So our special segment, as always, Midcap Spotlight, we are focusing on macro tech developers, which is trading at virtually the high point of trade. Sonia, up nearly 16%.
Absolutely. Big moves coming into macro tech developers. Now, Motilal Oswal released a report where they are very optimistic on the company. They say that there are sustainable industry tailwinds. Of course, demand is picking up, as we all know. But the management believes that the housing segment will be the biggest beneficiary of an increase in the country's per capita income. So they are forecasting that India's per capita income will rise from $2,000 to $5,000 over the next decade. And there will be a substantial rise in the middle income strata, because of which more housing will be needed and macro tech developers could benefit from that. The management expects the industry to clock in annual sales of 1 million units compared to 360,000 units in calendar year 2022. They expect pre-sales to grow at 20% compounded, and they expect their pre-sales to reach 20,000 crores by FY26. Also, they say that the operating cash flows that they will generate over the next couple of years will be sufficient for project additions, for debt reduction and for dividend payouts. So, you know, Motilal Oswal is very bullish on macro tech developers. In fact, the company has been very optimistic as well. The other stock that we're looking at is Olectra Green Tech. Now, that stock has been a big mover for the last many days. The stock is in fact up 54% from its 52-week lows, and this is an electric bus manufacturer, as we've been telling you. The latest news is that they've received an approval for their e-tippers, their electric tippers, and the first order of 20 e-tippers is in the final stages of discussion. So we don't know when these orders will flow through, but they've got the green signal for it, and that's a positive. The other announcement of a development of a hydrogen bus with Reliance is what got the stock buzzing in the last many days. They will be launching the hydrogen bus within a year. Now, this whole electric bus segment has really, blossomed over the last many months, as the state governments of India have been rolling out these projects, or rather rolling out electric bus orders for many of these companies. In fact, in the 9 months of this year, revenues in the e-bus division has gone up 174% year on year. So looking pretty good.
Looking pretty good. And Sonia, you seem like the magnet of good gains. You spoke about Electra, 5%, 6%, and the other one is 16% higher. At my level, unfortunately, I'm just stuck at some of these losers in trade today. One of them is L&T Tech Services. And why is that? Because Nomura has initiated coverage on the stock with a reduced rating. 3,050 is the target price that they have. The stock hovering around that 3,700 mark right now, under pressure by about 1.5%. They say that broad-based e-R&D service providers have gained market share versus pure play R&D service providers, which is what L&T Tech Services essentially does. So they are losing some market share. Apart from that, challenging macros will weigh on discretionary e-R&D spending from the clients itself. So the revenue pool will shrink even as their market share comes under pressure. Attractive portfolio suite of companies will be testing during these macro times itself, and at a time where the company is looking at SWC integration too. Importantly, they expect the earnings of the company to grow in a compounded manner of 15% over the next 3 years. But in their valuation metrics, even if the earnings compound at 15%, the ascribed value to the share is 3,050 rupees, which is a good 20-25% below the current market price, which is why it is lower in trade today.
Okay, well, with that, it is curtains down on Midcap Radar. We have covered the lengths and breadths of all the stocks that are, doing well in trade, not doing so well. But don't go anywhere. When we come back, MF Corner will return. Stay tuned.
ए लड़की तेरा नाम क्या है पूछने वाले पूछे तो बता तेरी